I'd like to greet you guys at the top of the morning. And it is Wednesday, February the 5th, 2025. And I'd like to welcome you all back to another episode of WealthWiseGuru. I'm your host, John Shav. Looks like we're starting out this morning with portfolios down by $295 and $300 now. And we are investing this morning $24,253. Still, earnings week is continually. A lot of companies having earnings week this week. And as you notice, this line here, has moved. So that's sort of like a kind of good indication that the stock is going to be going back up soon in value. But this is called the resistance line. And if you notice it then moved up instead of it being down here. And so anything below the resistance line, which is this here, this little dot you see, that's called the resistance line. Anything below it means it's going to be down. And when it's down, it's going to be red. Anything above the resistance line means the stock is going to be up. And so if it's up, it's going to turn green. So right now we are down 181. Still a lot of volatility. It doesn't really mean that the market is doing bad, anything like that. It's just that a lot of earnings this week. A lot of companies have done good, good earnings report, and they a lot of companies has a good earnings report, and so you have a lot of investors that are taking profit. You see profit, you take profit. That's a lot of people's motto, and so that's definitely not my motto. My motto is to build, and once you get your investments, your assets, once you get them to a certain particular level, then your investment can pay for all your toys and whatnot that you may want, that you may want in life. And so right now I'm definitely not there. So let's go around and take a look at the options. Now, when you see this number here, this is the number that I'm investing, $24,371. That's not the value of my portfolio. So the value of my portfolio this morning is is right at 70,000. It was 70,000. 71,000 on yesterday, and so today is down by $1,800. And so this is true value of my portfolio. I'm trying to get it up to 100,000. Like I say, your first 100,000 is hard, and that's the hardest part. Getting your first 100,000. Your second 100,000 is going to be much easier, simply because you have more money, more profit to level you up. And so, but keep on building. If you can get to 100,000, like I always say, you can get to 200,000. If you can get to 200,000, you can get to 3. If you can get 3, you can get to 4. The higher you go, the more level you go up, the easier it becomes to reach that ultimate goal of $1 million. If you can get to 100,000, you can get to $1 million just as well. All you have to do is just multiply that 100,000 times 10, and you at a million. And even if you have a million, you want to go 2 million, 3 million, you can do that also, especially if you are a really young person. So first up are my options. I closed out quite a few options on yesterday, and I still have a lot of them in place. As you can see, I got a couple of them still in the red this morning. And Palantir Technologies and a couple other companies had a good earnings week. Matter of fact, I think the whole market is kind of riding on the back of some of these tech companies as Palantir Technologies. But either way, I benefit a lot from Palantir's as well. Tesla's down this morning. It's still in the red. It's 4,000. I have 4,823 dollars of Tesla. Where's the value of it? I have 12.56 shares of it. So far this morning, it's down 106. The total return from it was $773. So you definitely still want to have Tesla in your portfolio, especially with Elon being a part of the Trump administration. And I see it's quite a bit of green this morning. Even metal, Facebook is up this morning by $1.78. Look how expensive that's getting to be. Metal is getting to be so expensive until it ain't funny. $705 a share. Wow, it's almost to the point where it's unaffordable to get into it. But if you're using the Robinhood platform, that's the beauty of Robinhood. You could buy the whole share, or you can buy a dollar amount, which calls fractional shares. Fractional shares you can put in as little as $5, $10, $25, or whatever the amount that you have available, and you do not have to put in you do not have to purchase the whole share of that particular stock, and you can still build up a nicely sized portfolio just doing that. And that's the beauty of trading with on the Robinhood platform. Also, you have Boeing Airlines is also a wonderful stock to have in your portfolio. It's up this morning by $3.19. I have 1.6 shares of it. They're right at $300. I need to be buying some more of it. Right now, my biggest players are a company like Google, which I have is trading at $189 and some cents, and I think this company is undervalued. But then again, Google has two trading platforms. It has Class A, and then it has Class C. So I actually have a little money in both of them. I have 102 shares of Class A, and it's valued at $19,400 some dollars. Total return today is negative $1,700, but total return is a little over $3,000. So it for some reason fell off quite a bit. Should be at 20,000 at least, or 21. But we still have a lot of red this morning, as you can see. Let's go on down to Nvidia. It's up this morning by $4 and some cents, trading at $122. So now it's time to get into NVIDIA before it becomes really too expensive. I got 111 shares of it, valued at $13,700 some dollars. And when I first got into NVIDIA, I got into it maybe one, two, or three shares at a time. It was a long way from being $13,000. So I've been actually owning this stock for probably I want to say over a year, or maybe a year and a half, maybe 2 years, something like that. It haven't been really a long time. But when I first heard about it, and I jumped in it. I think I jumped in it with it like maybe $1,000 or something like that, and I built on it from there, and I got it up to what it is, what you see now. And so I'm definitely a long-term investor on this particular stock. I would never get rid of NVIDIA. NVIDIA was one of my cash cows. And so the name of the game is to make money in these stocks. And if you can get this up to, say, just say 1,000 shares, you can imagine how much this will be. 1,000 shares. Let's see. If it was to buy 1,000 shares of this. See, 1,000 shares would be $122,560 some dollars. So if you have 1,000 shares, of NVIDIA, instead of selling somewhere with you could do what you call a poor man strategy, and this is what a poor man strategy would look like. And poor man strategy, build up yourself a income if you need like a secondary income, or you like to replace your first income. You'll hit trade options, and you go out here and hit this here, say cover call. You hit cover calls, then you go out and select your date. The thing about doing cover calls too, and select your date. Once you reach your date, you can roll it up, and you can just keep rolling it up and keep rolling it up and keep rolling it until your heart is content. So we go out and select a date. Let's see, we'll select let's see each one. Let's select January. Hold on. Let's go to March 2026. So we'll select March 2026. This is the current price here is $122.69. Anything below it, because this is what you call a call, and a call means that you think it's going to go up in value. And you can only do a call when you own 100 shares of a particular stock. So if you did not own 100 shares, at least 100 shares of a particular stock, then this strategy would not work for you. This is for those of you that at least own 100 shares of this stock. And you can do what you call a poor man cover call. And a poor man cover call is basically getting yourself some side income. And as you can see, the chance of profits goes up tremendously when you're doing a cover call. You see the numbers already. Just say a year from now, you expect to start goes from 122 to let's say 140. So let's click on 140. Has about till there 50.82%. Chance of profit is 75.75%. The volume of 71 means that there was 71 investors already have this particular strategy in their portfolio. You got another open interest of 1,202. Delta 54 is pretty good delta, and so then you would click sell, and then you would put your 1 here for 1 contract, 2 contract, 3 contracts, 4 contracts, 5, however many you want. Just say for instance we put a 1 there, and here's your limiting price over here. It's just already highlighted. You just type it in. Right now it's 22.10. And this will be your estimated credit. This will go right into your portfolio. See, max profit. See, this will go right into your portfolio when you implement this particular strategy, because you own 100 shares of this particular stock. And the reason I say you have to at least have 100 shares in order just to do this. But I say that you need to get 500 to 1,000 shares, just in case some of your shares are pulled away from you. You still own you still own some of this stock. Because what you really don't want to do is lose your cash cow. You don't want to lose your ship, or you don't want your ship to blow up. A lot of people say, I'm waiting for my ship to come in. But if you send your ship out, you got first send your ship out. And if you send the ship out and it get blowed up for some reason or another, get sunk, see, you don't want that to happen. So you need to own at least I would say 500 shares, or even greater, 1,000 shares. Anything above 1,000 shares, like 1,500, 2,000, then you're already a millionaire. You just waiting on time to catch up with you. And so if you implement this particular strategy, you would get the $2,200 some dollars into your portfolio. As you can see, that's the maximum profit of 2,210. The break even is 16210. Max loss unlimited. Max loss, you don't have to worry about that, because the only way that happens if it's a market crash. See, that's the only way that happens, a market crash. Market's not gonna crash. This is your profit from here to here, from the black dot to the green dot. Anything beyond that is insignificant. You don't even have to worry about that, because you already have a set price list already locked in. Just like this is locked in, and you can only lose so much. It does go to unlimited, but like I said, that's not gonna happen. Again, it's from the black dot to the green dot is your profit. And so this will become available to you right away. As soon as you implement this particular strategy, you will have $2,209 in your portfolio. And this is for demonstration only, because I'm not trying to do this. I'm just showing you guys the benefits of only 100 shares and 500. You need 500 shares. So it would benefit you more having 500 shares still. So the 100, you at least have 100 just to start out. But 500 is greater, because you need 500. If you lose 100 or 200 or 300, you still in the game. You still own shares of that particular company. So that's why I say you need 500 to 1,000 shares. And you can do and implement this particular strategy in any company that you own in your portfolio, including Pioneer Technologies down this morning. It's at 16,083. Let's look at it. We're down this morning by $3.20 some cents. Shares was 159. Have 159 shares. I think I bought about 10. I might have bought 15 shares on yesterday after, because they had their earnings call, and they did very well on the earning call. So I bought some more shares of it. The value at 16,000. So far today it's negative 500. But so far the profit has made $7,790. And you can do the same thing with this particular company here that has 159 shares. You can do a poor man cover call. You hit trade. You hit trade options. Then you go up and select your date. And I would go out at least 1 year. Say January. Let's go out January 2026. Hold on, let them. And then pan out right. You hit trade, and then you go and hit trade option. And then you hit the cover call. Now you select your date. And I'll go out to January 2026 and click it. Okay, and then you scroll up until you start to see the current price, which is $100.66 until it starts to move. It's going to be a call, so it means it's going up in value. So anything above this current striking point is going to be out of the money. Anything below it is going to be into the money. And so the higher you go up, the better chance of profit you will be with this particular company. Let's look at, say, 125. 125 we give you 19% chance of profit. A volume of 47 means currently 47. 47 investors with this strategy in their portfolio. Then you have another interest of 773. Volatility is kind of high, 63.10%. The delta is 50.83. You have to be careful and watch out for your theta. If you have a high theta, it's going to eat up at your profit at a much faster rate. So this is a low theta. And these are the delta, the gamma, theta, vega, and wall. These are the alphabets when it comes to investing in the market, called the Greeks. And I have a video, I think, an earlier video where I explained the meanings of the Greeks. Delta is 50.94. It means that your profit will be $50.89 a day. If you have a high theta, then the theta can eat up at the delta over a period of time. If you did not want to implement this particular strategy, you can just simply add it to your watch list. Just click add to watch list, and then when it come up on the screen, you just watch it. If I was to sell this, I would hit sell, and then I would put in a warn here, and I would put 17.85. You want to make sure it says how high I feel like could, and this would be my credit of $1,784.86. This is a credit and not a debit. Credit, not a debit. So credit means that it would go into your portfolio immediately after you implement this particular strategy. And this is the breakdown of it. From here to here is insignificant. From here to here is the loss column. And one way this happens is the market crash. From the black dot to the green dot is your profit. From the black dot to the green dot is your profit. And so you just hit review. That's the chart there. The chart there telling you all about it, a little bit more about your expected profit and losses there. And so you just hit review, and this will goes into your portfolio. You will have immediately available to you $1,784.96. But like I said, you have to first build up your portfolio to where you have at least 100 shares of a particular company. The idea is to have between 500 and 1,000 shares available in your portfolio. Then when you have that kind of them kind of numbers of shares available in your portfolio, then you have what you call wiggle room in order to play with, and you can replace your you can have a side income, or you can replace your current income. And the more shares you have, the more wiggle room you can have in terms of building yourself a side income, or either an extra income. So let's take a look at so far. You can do that with any of these stocks that you have and that you have in your portfolio, even with the S&P Y 500. S&P Y 500 is a company you can also build and put a couple man call on it. Let's see if we find this SoFi. Well, I'm big on SoFi. I bought some more for SoFi 2 this morning. SOFI. Sometimes like I have so many companies in my portfolio. Sometimes it's hard for me to find them. Trust me, I done got rid of a whole lot of them, and I closed out a whole lot of options. It doesn't take you having this many holdings in your portfolio. I just do it because I do this on a full-time basis. I don't just set my stock and losses and limited loss. I don't sit and just walk away from it, but I constantly watch and monitor and do things throughout the day. So I'm what you call a full-time investor and actually a day trader. But still, if you are like a day trader, like I always tell you guys, if your account is below 25,000, once upon a time I had quite a bit. Right now it's below 25,000. It means that's the investment price. So I'm trying to get it back up. I have what you call a margin account. When you first start out, you're going to start out on the cash account. A margin account, again, is when you have it matches you dollar for dollar. And you have to at least have $2,500 to be in your portfolio in order to qualify for a margin account. You get a margin account when you have a small account, but you have $2,500 available. That way you double the size of your portfolio, and you're able to grow your portfolio just that fast, just that much faster. Anytime you add money to a margin account, say you want to add, say you got $500 check, $1,000 check, and anytime you add money, they're going to add money too along with that until you go back in and cancel that. And so SoFi, I have 123 shares of it. I'm regular still building with SoFi. Value at $15.42 this morning. Now it's time to get in with SoFi and continually to build up your portfolio with SoFi, because it's still cheap. It ain't $15.41. Same way I did the same thing with Pioneer Technology with this. So there's no excuse for saying you can't afford it. Yeah, you can afford it. You can build this company. You can build this up to 100, at least 100 shares, or going up to 500 shares, or going up to 1,000 shares, and do the same thing. And over a period of time, when this goes up, this goes up. This become more valuable. And so let's take another temperature check. See how well the market is doing for today. So far, we are up this morning. We are invested this morning $24,200, and we're down 365, and the resistance line. The resistance line has went up. And usually, when the resistance line goes up or move like this, it means that the stock is going to go up. So next week, right after earnings next week, this hopefully it'll go up. Just all this depends on how well the rest of these companies do during Q and 24 earnings week. And so the morning briefing on the stock market this morning. Stock market is experiencing volatility today due to mixed earnings reports and ongoing tariffs concerns. Let's see, today the market is reacting to disappointing earnings from major tech companies, which has led to decline in key exchange traders funds. The S&P DR, S&P 500 ETFs Trust, the S&PY is down 0.5%, reflecting investors' cautions. Notably, the NVIDIA stock has seen a significant drop of 17% after a recent earnings miss, prompting many investors to buy the dip, a trend that has been prevalent since the pandemic. Additionally, ongoing tariff discussions, particularly those involving China and the U.S., are creating uncertainties in the market, impacting sectors differently. While technology stocks are struggling, some service industry are expected to benefit from the current economic climate. And so we still have some up and coming events for this month. See, 206 earnings report. Major companies will report earnings which could significantly influence market segment and stock prices. 210 inflation data release. The up and coming inflation report is crucial as it may affect interest rates expectation and overall market direction. And 215, the Federal Reserve meeting, the Fed discussed the Fed decision on interest rates will be closely watched as they can impact borrowing costs and economic growth. And so let's see what's happening in the market. Tesla seeks Germany's car sales. Tesla sees German car sales plunge in January. Tesla sales in Germany drops nearly 6% in January, and highlighting challenges amid rising competition, scrutiny of the CEO Elon Musk political involvement. This decline raises concern about Tesla's market position also in Europe. China is considering Apple Store investigation. Bloomberg. Apple stocks fell in pre-market trading as reports emerged that China is investigating its Apple Store practices, potentially impacting its revenue model. This scrutiny could affect Apple operation and investor segment. What's Alphabet's Q4 earnings CapEx plan means to the Mag 7. Alphabet's disappointing Q4 earnings and increased CapEx spending has negative impact. Its stocks in the broader tech sector, raising concern about the future possibility in investment returns among investors. And let's see. So there you have it. That's your morning brief concerning what's going on and what's affecting the stock market. And so I think we're gonna bring this video to an end. So may all your trades be a good one. Have a good and blessed day. Be safe out there when you're going back and forth to work and what have you. And we'll see you guys again in the next video. Thank you for watching.